Looking at the tax plan, your initial reaction, this party line vote, 51 to 49, $1.5 trillion added to the deficit over 10 years. Initial reaction when you saw that passed?
Well, I think that what you're seeing is just political fear at work. You have Republicans who are eyeing the fact that a Democrat might actually win in Alabama, which is almost unheard of. They're looking at polling numbers across the country, and they're just afraid. And I think they believe they need to do a tax bill. And so measures that normally, could never unite the fiscal conservatives with the tax cutters, suddenly all those differences have disappeared, and they're just plowing forward with a bill and not overly worried about the details.
Well, Jaret, even if you don't get into the minute details, just the general form of this tax plan has got a lot of people saying that, in fact, despite what Donald Trump and other Republicans say, it won't be popular at all. Chris Repke, his chief financial economist over at MUFG Union Bank here in New York, says, first of all, the economy doesn't need it. But second of all it's not going to increase wages of workers. Corporations are going to buy back stock. All it's going to do is defund the federal government, harm Washington's support for state and local government. Tax collections in the future will be less, and that can only mean one thing. Mandatory entitlement spending of the federal government is going to have to be less as well. And I have been talking to people, I've been seeing this kind of commentary. Is that valid, or do people not understand the magic of these Republican tax cuts?
No, that's absolutely valid, but that doesn't mean that they shouldn't try to do something. If you're a Republican right now, there's few legislative options really available through the end of the year. You have a White House that is just one giant distraction after another. You have a political process in the House where there are a number of divisions, and so the only thing they really haven't reached is this tax bill. And our view is that this bill is just going to keep getting simpler and simpler and simpler. And, what started out at one point as tax reform, changing the code, trying to make the economy more productive, favor domestic production, now it's just spending $1.5 trillion to cut taxes and use the deficit to pay for it.
Well, Jaret, is there any way that then the stock market optimism, let's assume this is going through, let's put Michael Flynn and the impact that had on stocks and bonds on Friday to one side, the optimism in stocks has been buy stocks now because there's going to be a huge rally. Maybe it is just because companies buy back their share prices instead of investing in plant and equipment, for example. So will it turn out to be justified, do you think?
Well, you're going to take certain companies that have tax rates in the low 30s or high 20s and reduce their tax rate to 20%. That's going to be a benefit. One area of banks, right? Banks have among the highest effective tax rates. So if you take their rate from around 30 and bring it down to 20, that's pretty good for those companies. But you raise a great point, and I thought the most telling point about this bill came when Gary Cohen asked that room full of executives whether any of them plan to hire more people because of the tax cut, and nobody raised their hand. And it's a problem with this bill. What these companies are incentivized to do is to put that capital to the best use possible, and in a lot of cases that means buying your stock if you believe it's undervalued.
Jaret, you mentioned a minute ago that this tax bill is getting simpler and simpler, but is it really? It runs to 479 pages. Democrat Senator Mark Warner called it Swamp 101, saying there's handwritten provisions being written in as it goes. And then if you look at the last time the tax code was rewritten in 1986, that took months. This has been done in 11 days. Is it both rushed and complex?
Okay, so what we mean by simplification is that the original idea for tax reform was we were going to have this border adjustment tax, and the whole idea was to try to favor domestic production and shift the tax code around in that manner. And then on the individual side, everybody was going to get to file their taxes on a postcard. And that's not really, that was the concept of reform. And what they're doing instead is they're just bringing down rates. Yes, there are a lot of provisions in there, but in effect, it's a cut in the corporate rate, and it's a reduction in individual rates and a doubling of the standard deduction. and then they're trying to find some offsets because that costs more than $1.5 trillion.
Jaret, Paul just now mentioned just a little bit about the speed of this happening. What struck me as really eye-popping was that there were these handwritten notes just done in the last few hours. I mean, how are we supposed to have confidence or trust that that has been well formulated here? Should we even have that?
Okay, so I mean, I love the handwritten notes. Senator John Tester did a great little video with the handwritten notes. However, I mean, that's not that unusual for big pieces of legislation as they're moving forward, where amendments get written in hand and then it gets distributed. I mean, I go back on this stuff to the early 90s, late 80s. I mean, we've seen that on other bills. So, I don't want to get too caught up in the fact that it was handwritten. What it does tell us is the idea that the House is just going to take this bill and approve it and it's suddenly going to become law, that is very, very low probability. And we will get a conference. And in that conference, they're going to have to fix, the mistakes that invariably have been made.
All right. If you've been seeing the handwritten notes out there, then I'll take your word for it that that's something that we can go on. I still have a little. That
Tester video is great, though.
I still have a little doubt in myself. But, you lead me to my next question about reconciliation. Of course, moving ahead, what is the top sticking point for you out there that you think will be the biggest hurdle?
So I think that they are going to raise the corporate rate in order to drop more and more controversial provisions out of this bill. You have a lot of interest groups that are making the argument that this was unfairly targeting them. A lot of complaints today about the research and development tax credit that's going to lose its value with the reintroduction of a corporate AMT. You're going to have to find some way to offset keeping that alive. The real estate industry wants to get rid of provisions that would make it fairly punitive. If you buy a house and your job moves to somewhere else and you have to move, you could get hit by a new tax. So there's a lot of stuff like that they want to pay for. Easiest way is raise the corporate rate.
Well, I guess so, although they're cutting it. Hashtag BTV 1387, the U.S. deficit is a percentage of GDP. Now, you can look at the chart we have, and you'll see that it came down a lot. Now it is at a point where it doesn't look too bad, but it could be even getting worse again. Anyway, my question to you is this. Will Donald Trump be able to sidestep the fact that he is the Republican president when the Republican House and Senate push through a bill that may very well increase the budget deficit if it doesn't boost the economy and growth the way some think it will? Or is this something you think that'll hurt him? He thinks it's going to help him in 2020.
Well, I mean, first we got to get to the question, will he even run in 2020? And I understand he keeps saying he will, but I don't think we'll know the answer to that until 2020. But, it's many Republican presidents have left the deficit or the debt much higher. Reagan certainly did. Bush with Medicare Part B. So, he joins a fine list of his predecessors in, enjoying deficit spending.